Hey, what's up guys? Sam here, and I'll be doing the free video for Friday, January 26th, 2024. So as usual, I just wrapped up the premium video for the folks in the gold room, and we looked at the SPY, the QQQ, the IWM, HYG, which is junk bonds, LQD, which is investment grade bonds, ZB, the long bond, the dollar, and VIX. And as you can probably tell by the type of action we've seen in the markets lately, most things looked bullish, but there was a couple of things where they were getting a little bit sneaky. So normally in these videos on the YouTubes, we spend a lot of time here on the index, and I kind of give you the breakdown in terms of like the cliff notes, if you will, of what I covered with the premium folks. But I want to just show you more so the little sneaky stuff that I'm seeing. Before we do that, be aware that next week, and I'm sure you are, but just as a reiteration, next week is Fed. There's also multiple central banks reporting rate decisions, but obviously the big one is Jay Powell and Fed. You're going to have mega cap tech earnings. I think Apple and Microsoft and Google and Amazon. I don't know if they're all up next week, but most of them will be up next week. And it's also the end of the month, right? So if there's a period of volatility that will open up, it will typically be next week. So let's all appreciate that from a number of different factors. Now that's the headline risk. That's kind of the stuff that's commodified information. We all can go on Forex Factory and read the same stuff. So let's dive in here to the Qs for just a second, and then I'm going to spend maybe a couple minutes with you on a couple of little sneaky stuff that I'm seeing. Now again, we have to weigh it accordingly because the signals here on the Qs are pretty strong, right? When you have a max bull on the weekly and a max bull on the daily, and you're trading at all-time highs, it's hard to argue with that. That is a strong animal. But unlike previous Fridays when I've been with you here on the YouTube, we actually do have a couple of sneaky signals that we need to cover. So at least so far on the Qs, what do we see? We have max bull across the board. I'm not overly a huge fan of these candlestick patterns right here, but at the same time, on their own, they're not necessarily bearish. I don't have any reversal signals whatsoever to speak of. And I don't even have a momentum turn on the squeeze histogram, which is one of the first things that would turn. So I have no reason to doubt this going higher into next week, although I certainly appreciate the distance that we are away from support and the event risk that is coming next week. Let me show you some of the sneaky things that I'm seeing. The first one's going to be the long bond. It's going to be ZB. Now, unlike previous Fridays when we've done these videos together, the long bond is now in a down cycle. What does that mean? Well, in a down cycle just means it's the opposite of this. So you had a up cycle that started there, that took you all the way there, and then you hit a little bit of a speed bump, and I would say multiple speed bumps, and you can see now you're in a down cycle. What would reverse this? Basically any one of these signals here, but at least as of right now this is very clear in my opinion. You can see up and then down as indicated by the arrows, and then also on the weekly chart, and this is pretty important, you can see that it's being hit with a mid-level arrow as well, similar to these back here. Do I think this is what happens? Probably not, but this is the first time since the rally started that we've had any type of friction in the long bond. Sneaky point number one. Sneaky point number two, the dollar. So these two will work in tandem. If you start to see the long bond go lower, that will typically put pressure to the upside on the dollar. So I'm basically showing you two sides of the same coin, but you can see here on the dollar, you also now have a couple of little sneaky arrows giving you thrust higher. At the end of the day, the dollar is basically just in a giant box, so it's not overly dangerous, and if you draw kind of a center line across the box, you see how the dollar is basically right smack in the middle. So it's not an overly dangerous position, but what the bulls would definitely want to see is for the dollar to do this, right? Nothing would make bulls happier than a big down candle on the dollar, but as of right now, you actually have pressure to the upside, so you don't actually have that. The dollar is going neutral and bullishly neutral on the weekly. So take these three things and try to square the circle. We have the QQQ, which is wildly bullish and has been wildly bullish for quite some time. And then we have the long bond ZB as well as the dollar getting a little bit, long bond getting weaker, dollar getting stronger at the same time, which we haven't seen yet. We also are going into next week with some rather large event risk. So what does it all mean? Well, see if you can guess what I'm going to say. What do you think I'm going to tell you is the approach to take when you have this type of situation and this much event risk going into next week? What do you think is going to be the answer? And the answer is shrink your time frame. Go to a lower time frame, right? Because if we go back to the Qs for a second, it's a little bit tough and slightly unpalatable to trade the Qs this far away from support. And the reason being is we all like to use the daily 21 as a level, but that daily 21 is 10 points lower, right? So if I start buying up here, I have to have the stomach to handle it down to there. And I can guarantee you most people don't. So how can I adjust for that? Because we are very far away from common support. I shrink my time frames. So what does that mean? Well, this whole time we've been looking at a weekly and a daily chart, right? And I think this is a very fine way of looking at things for swing traders. Next week, instead of looking at the weekly chart, I'm going to look at a 15-minute chart. And that's going to be my quote-unquote weekly. Instead of looking at a daily chart, I'm going to look at a 5-minute chart. And that's going to replace my daily as well. And then I'm going to look at maybe something like a 2-minute chart as my compromise for the hourly. Basically, what does that mean? It means day trade. Now, again, your mileage may vary, and you can see things certainly differently than I do. But anytime that I've seen a situation like this, going into a high impact type of week like we have ahead of us, with a little bit of the sneaky stuff going on in the long bond as well as the dollar, I have always found it to be a little bit more profitable, and I sleep better at night when I day trade and go to bed flat and wake up the next day willing to embrace the volatility. So hopefully this puts all the pieces for you together. No stock picks this week because I don't think they're overly relevant. I think if you can call the market higher, then you can buy anything. If you can call the market lower, you can sell anything. And really the main point of the conversation for you guys today on the YouTube was just to show you those couple of little signals and show you how things can look really bullish on the QQQ, but then you can have a couple of developments in the long bond and the dollar that might want to give you a little bit of a pause. So that's the way I'm going to approach next week, guys. Thanks as always. Make sure you leave us a like before you go somewhere else on the YouTube, especially if you found this helpful. Drop us a like. It does help us with the algorithm. If you really found it helpful, drop us a comment. I still have to go back. Like 2 weeks ago, I challenged you guys to find something on the indicators, and I never went back to those comments. So next week, I promise you, I will actually make some time to go back like 2-3 weeks and answer those questions. Also, and this is pretty important, if you have resonated with our work here that we've done on Fridays with these videos, or you're a member of the Gold Room and you also watch the free videos, tomorrow we will be having our class for the indicator launch. So we're launching the indicators. We launched them already, but the class is officially tomorrow. So we're going to have a link right below this video if you want to check that out. Check out the webinar if you're at all interested, right? The entire system is momentum based, and it is the most comprehensive view of momentum that I have personally ever seen. So this is something that you can see right on your screen at the moment. You can judge it for yourself. Check out the webinar. It's also on YouTube. You just check out the first one. I think that one's good enough. And if you're interested, I'd love to see you tomorrow for the class on Saturday at noon Central. Thanks again, as always, guys, for stopping by. Drop us a like, leave us a comment, even if it's just your dog's name or what you're going to have for dinner tonight. And I'll catch up with you guys hopefully tomorrow, but definitely again next Friday. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.